Hello, thanks for coming along to our brief session on tax pooling. I'm Richard Ashby, I'm our tax director at Gilligan Shepherd, and welcome to Jeremy Memon from Tax Traders, who's kindly come along to give us his thoughts on the best ways to use tax pooling. So Jeremy, welcome again.
Thank you.
Perhaps we'd just like to give a brief introduction about yourself and about Tax Traders as well.
Absolutely. For myself, I've got two little girls under 5,
Wow.
and they're at home at the moment with their mother, who is chasing around after them, and that's wonderful. I'm an accountant by background myself.
Yes.
I think I qualified in 2008, so I've done my time.
Yes.
And Tax Traders, we're a tax pooling intermediary. We're really passionate about how we can help people pay their tax in very flexible and unique ways. So we're all about finding solutions to support businesses.
Okay, and I see you do support in more ways than one too. I see you've got a few community projects that Tax Traders gets involved in. And
so we see business as more than just what you're doing, but it's also about how you're doing it and how you're working with others in the society and working in the culture you're giving. So it's really important to us to be able to give back. And we recently became a B Corp with one of the highest corporate governance scores in the world, actually. So we're very proud of that, and we're very excited to be able to think broadly about how we impact the communities and people we work with.
And you I mean, that's great to hear. And you've got some good people behind Tax Traders too, haven't you? Like in its founding. I think you got an ex-commissioner of an area.
We've got Robin Oliver and Mike Shaw and Keith Smith. So Robin Oliver was an ex-deputy commissioner of Inland Revenue, and Mike Shaw's a Deloitte partner, and Keith Smith's a former chartered accountants president. So they're people who really help guide us. And they've opened some great doors for us, but provide us with that extra level of advice as to how we might navigate and work well with accounting firms such as yourself and the industry as a whole.
And you've been around since 2006, is it?
I started 2011, 2012. Tax pooling itself has been around since around the early 2000s. But we sort of set up in 2012 really to revolutionise the tax pooling market, to really innovate it. It used to be a market which was really dominated by large players, and only the largest players in the market would really benefit from tax pooling. But it's such a great thing, and I'm sure we'll talk about it more, that we wanted to innovate and bring technology into it so that everyone and all businesses can benefit from it, because we are a country of small businesses. So it's really cool to be able to support businesses, particularly through the last couple of years, which has just been challenging. Let's just say challenging for all of us.
Yes, a very good word, I think, in the present environment. Well, without further ado, then let's get into the details.
Sure.
I'm sure everyone's waiting to find out. So, can you explain to the audience a little bit about what is tax pooling exactly?
So tax pooling, I think to understand tax pooling well, you need to understand provisional tax and how that works. So provisional tax is one of the largest expenses and largest payments that many firms will make every year. And they'll pay it in 2-3 big chunky amounts throughout the year in anticipation of what their final tax amount will be.
Right.
Now, if you're a seasonal business or you're a business with ups and downs, paying 3 installments of big chunky amounts throughout the year can be very painful for your business. It might not be the best decision to use your cash.
Right.
And it might just not work. You might have a good opportunity come up, you might want to hold cash, or you might need inventory. Particularly in the current environment, we've seen supply chain issues and people want to hold more inventory. So they might actually like, hey, yes, my tax is due now, but a better use of my funds for my business right now is inventory. So they might decide that they've got a difficult choice. Do I pay my tax now or do I buy the inventory? Now, tax pooling helps with these decisions. There's hard points here. Tax pooling gives you the ability to flex your payments in a way out over the year or in chunks or whatever suits your cash flow.
Right.
It's no longer rigid and stuck. as in provisional tax, but it says, hey, I can pay my tax at a time which suits me and suits my business and my business needs. So that's really important.
Yeah, and I certainly also see that there is a number of different payment options. Like you can arrange in advance, or if you actually missed a payment, you can come back in arrears and sort of catch up if you like.
Yeah, and that's often people's first introduction to tax pooling.
Right.
Missed a payment at IRD, and there's 5% penalties on that amount. There's 7% interest on that amount, and it's adding up fast. And at that point, often they might be introduced to tax pooling and saying, hey, there's a big bucket of cash in the pool at IRD that you can access, and you can go to a tax pooling provider like Tax Traders and buy a chunk of that tax, and then you can get that transferred to your account and you're treated as being paid on time. Right. So that's how that basically works. So, but then how do you pay for that tax you just bought? So you might want to pay it in one lump sum, you've got cash, or you could pay it off in monthly instalments, weekly instalments, fortnightly. You can even do a fully flexible plan. Okay. But basically there's any way to suit your cash flow in your business.
Okay, and I think you've got a nice online tool as well, which can help you with exploring those options first up. Yeah,
and we've got 4 payment tiles like that, so it makes it really simple to compare your options and be flexible. You can edit plans as you go. Okay. Basically, we've taken a very chunky legislative instrument, and we've broken it down into something which is, hey, how can we help work within the context of your business? Okay, and I guess you've got people behind the scene too. Someone's doing the calculating and gets stuck, then they can just give someone. Yeah, we absolutely love to hear from our customers. Yes. And I've got some insanely good people on the phone who are really good. They can understand your problems. They'll find the solutions, and we just love helping people. It's a real pleasure. Excellent. Very good. And what kind of tax can I use tax pooling for? Can you use it for all types of tax, or is there limitations on the type of tax? Well, it's mainly set up for income tax. 95% of the cases are for income tax and provisional tax. Right. Because you are guessing about the future and about what it might be holding and whether you're going to pay too much or too little. There are some circumstances where you can use it for other types of tax, like GST and that, but that's only in the instance where you've had a reassessment of the tax there. So you get audited, where you make a mistake, where you come to there, you can come back to the tax pool and buy some tax in that way. Okay, so you can't, if I've missed filing my GST return on time, I'm getting charged this money interest, and I can't use Tax Traders to pay for that, or get me an earlier payment date for that missed payment. Well, there is one way, and I think that sort of jumps forward to depositing. Okay. Yep. So we could pick that up then. Yeah, okay. And what do you, when you're talking to people, what do you really see as the benefits of tax pooling? Yeah. Critically, it's the benefit of flexibility in your ability to pay your tax when you want it and as your cash flow provides. Okay. That is the big one there, and you're saving all the penalties and interest you pay at IRD by not paying on time, and it gives you flexibility. You're getting a whole bunch of ability to manage your tax through a very smart system, and you're dealing with smart people. So the things we consistently hear about is how great our technology is and how amazing our service is. Excellent. Yeah. And just to reinforce for the audience, so you still pay some interest. Yes. It's just not as much as what the original charging. Yeah, so we always are charging less than what you pay the IRD overall. Right. So if the IRD is charging 7% at the moment, I think current rates are somewhere between the 4 and 6. Okay, so definite savings to be had. And is there any criteria for using the service? No. Can anybody use the service? Yes. No limitations? You don't have to be a member of a account. You don't have to have a tax agent? No, you don't have to have a tax agent. It's open. And as we said before, we're real passionate about taking it to everyone. And we talked about being a nation of small businesses. Yes. And we want anyone to be able to use it, to be on the phone, to use their tax agent, just to be able to do it. So you don't have to have a deposit in our pool. You just come up and say, hey, I need some tax. Give us a call and we'll sort it out. And so no advantage of coming through a tax agent either, therefore? Well, there are advantages in coming through tax agents, like Diligent Shepherd, like yourselves. Yes. A, they're going to make sure you get the right tax amount at the right date.
Yes.
That's really important.
Sure.
And the other, you get discounts from coming through your tax agent that you wouldn't get if you came directly.
Okay, so that's a key point to understand.
Yeah.
That there is a benefit going through an agency.
Correct.
Okay. And you talked a bit about depositing funds into a pool. Why would I do this?
Yeah, good question. So to get the money in the pool, in the first instance that you can access, people have had to put that money into the pool. That's called depositing. So rather than putting your money directly to IRD, when you've got the cash, you put it in the pool. Now, the main advantage we've seen, particularly over the last couple of years, is the ability to get your money back out of the pool without having to go through IRD and file an estimation.
Right.
The real key thing there is, hey, I'm going to get my money back when I need it, and literally been a lifeline for some businesses who've got cash flow problems. Could have even been profitable, but needed that cash back in their business.
Right.
So that's one of the main advantages. The other advantage, which we sort of lightly touched on before, was the ability to take your cash deposits in the pool. Let's say you had another bill coming up for GST or something like that. We can transfer that money across to your GST account.
Okay, so that catches your missed payment.
Can catch your missed payment
if you've got a deposit in the pool.
Yeah.
So if you've got a deposit in the pool, it doesn't have to necessarily be used for income tax.
Correct.
It can then be used for other tax types that you may have.
Correct. But it's got to be a cash deposit. You can't buy it. So yes.
Okay. And there's certain, just on a side issue, there's certain timeframes too, isn't there? In terms of when you must buy your tax by.
Yeah, good point. Great pickup. It's what I can call the 75-day rule.
Okay.
So you've got 75 days after your terminal tax date to settle all your tax pooling. So practically, if you've got a 7th of April terminal tax date,
right,
then you'll have to do your tax pooling for that particular year by mid-June. It has to be all settled up by mid-June and across to IRD, and then that tax pooling period cuts off.
So the thing that comes to mind then is if I have filed a tax return late, so it's not a reassessment, I've just filed a whole lot of late returns for whatever reason, and obviously their terminal tax dates are historic. Then I'm not going to be able to use tax pooling for those.
No, not usually.
Because it's not a reassessment, and it's not within 75 days of the current terminal tax date.
Correct.
Yeah. And I see they've just given a COVID-19 extension to the 21 year.
Yeah.
So of 183 days or something. So you've got a bit longer this.
No.
No?
No, the applications had to be in by 21 June.
Oh, okay. Okay.
So you had to have something in our system by then.
Okay.
But yes, otherwise you've done it. Yeah.
Okay. And I guess, the burning question on everyone's tongue is tax pooling safe?
Yeah.
I'm not putting my money in the bank, I'm not putting money at the IRD, I'm putting money at this sort of intermediary.
Yeah.
Is it safe?
Well, I think it's worth remembering that while it's innovative and it's really great from that perspective, it's been around a long time. It's been around since the early 2000s.
Yes.
And so we've had about 20 years under our belts. The tax pooling money itself is actually held at IRD.
Right.
So the money goes into an account at IRD,
right,
in the pool. So you're just putting it in an account, not a specific account, but at a general account at IRD. And that account is managed by an independent custodian, which in our case is Public Trust.
Okay.
So they look over that. We also go to the extent of getting our accounts independently audited, and a number of large accounting practices have been over our processes. So there's a lot of rigor that goes over there. We have over 800 firms who work with us, and more than 35,000 taxpayers have used us. So,
yes.
So yes, it's very safe.
Okay, excellent. And I guess finally, any tips, any common mistakes, any common misunderstandings that you see from people coming to use your service?
Yeah, that's a good question. It's not just an after the event thing. Don't wait. If you come to us, let's say you come up to provisional tax date and you already know you don't want to pay it, then you can come to us beforehand. We'll give you a better rate.
Okay.
And we'll secure your tax supply for you right then and there. come to us advanced and use it as a proactive tool.
Okay.
And rather than coming to it afterwards. The depositing, I think is going to be particularly useful in the next few years. So if you've got cash coming up to your date, to your tax date, put it in the pool. It's going to give you flexibility. We're seeing high inflation, high interest rates, and talks of recession. So what are we going to do? You need to give yourself options, and you get options by depositing into the pool. So think about it as not just a, hey, I'm going to tidy up something after I missed it, but how can I really proactively stay on top of my cash flow?
Right. And just the question I didn't cover is, so with the deposits,
Yeah.
do you get paid interest on those deposits?
Yeah, important. Thanks for bringing that up.
Yeah.
If you have surplus tax,
Yes.
you'll get paid interest on that deposit. So let's say you had $100 of deposits in the pool, and you needed 80 of those for your own tax. You transfer that across to RD. There's no interest on that, but on the surplus tax, we will buy that off you, so we can sell it to someone else.
Okay.
Yeah.
Okay. Excellent. Well, that's pretty much all from me. I think that gives the audience a pretty good understanding of how tax pooling works.
Great.
Do you have any other comments you sort of want to make to close off?
No, we love working with firms like Gilligan Shepherd, and it's really good. And I love innovative solutions, and this is a really good option right now in the current environment.
Excellent. All right. Well, thanks again, Jeremy, for coming in and sharing your thoughts with us. We very much appreciate it.